Earlier this month, global telecom giant Vodafone published data on how much direct and indirect tax it has paid in each of the 27 countries it operates in. A noble half gesture because it lacked a region-wise revenue or profit breakup. But more MNCs may follow in Vodafone's footsteps, especially as both the US and European Union are now debating making country-by-country reporting mandatory.
We need to get everyone knowledgeable enough on what are the issues and what to do. And not everyone is on board in that sense. Not everyone gets the same information. So you know, I think country-by-country reporting will be some time off, but I don't know.
Professor Pichel, is country-by-country reporting the solution or the first step towards fighting double non-taxation as well? Because, I mean, if you don't have the information on who's paying how much where, how do you fight this?
It's an essential first step. There's no question about that.
So is it going to become a reality? Is this something companies should prepare for?
Yes, and it's already being encouraged and fostered by a number of developed countries, putting pressure on the developing countries, especially those that don't have strong income tax systems, who are basically income tax havens. They have other forms of taxation, such as VAT and sales taxes, things of that nature.
So you think that will eventually lead to formal country-by-country reporting requirements for most multinational companies across the world?
It's hard to say that that's actually going to happen, because it depends on where those multinationals are actually headquartered. And they may fragment their functions as a result. It may be difficult to amalgamate all of them to come up with one number. That's part of the problem that we face.
I think the overall theme is that there is more information available for the tax administration, but also that there is more awareness how much tax is paid by a corporation in which country also. And I think there is also a trend that tax planning decisions are not any longer in the responsibility of the tax director, but also of the board. So therefore, within the company, there are quite often changes nowadays. So their tax is more connected to public responsibility, I think, which is an interesting development.
A study by activist group Citizens for Tax Justice claims that at least 18 large American multinationals are stashing profits in offshore havens, which if repatriated could yield the US $100 billion in tax. Reuters says at least 206 of America's largest 500 companies by market capitalization have one or more subsidiaries in Ireland, where the corporate tax rate is 12.5%. Almost 3/4 of those 206 firms also had one or more Dutch units. As the activism builds, MNCs will most likely have to give up their steady diet of double Dutch Irish sandwiches.
What the multinationals may do, instead of doing something directly, is what they may do is work with unrelated parties to move funds from a country through an unrelated party to another unrelated party to their subsidiary or their headquarters in a tax haven country. So there are other ways the multinationals, if they wish to do so,
can get around
this. Yes, but we have some multinationals who are currently paying, as you said, effective rates in 2% and 3%, and I don't think that they're eager to pay 25 or 30%. Let's put it that way.
Well, I'd like to pay 2% and 3% as well, but unfortunately it's not an option for individual taxpayers. This kind of not specific to any one country's revenue, but how do you see revenue starting to deal with some of these issues? So are we seeing, or should we expect, for instance, a big change in treaties across the board for most countries? Should we expect tax laws being rewritten in the next 10 years to be able to plug all these loopholes? What will we see revenue do?
Well, I think first of all, we will see a lot of domestic changes, because it's much more on the front page. You know, we're not accustomed to be on television even. You know, but taxation now is front page news, and that is unusual. That hasn't happened before. And I think from my colleagues from the private sector, I hear nowadays a complete different tune. The multinationals that come into our country will say, well, you know, I don't want anything strange, I don't want to be anything more than I can live with it on the front page. So it's a different attitude, and I think it has to do with Michael was saying about soft law. You know, we don't want to be looked at on as baddies. You know, and in a combination of soft law, I think there will, I mean, the initiatives of the G20, which I think more from G20, and I think the OECD taking on board that work, is going to lead to changes, definitely. And I think we will have things coming up in transfer pricing. I think we have things on CFC rules. We have more exchange of information, and all those things will be have to be implemented by country.
In OECD's 15-point BEPS plan, the very first action point is to address the challenges of the digital economy. India is yet to wake up to the problem, but Europe, USA and Australia are already hard at work.
I do think there will be changes, but that will have to be done, you know, within 2,500 tax treaties if we're going to change it. So it has to be done in a multilateral way, and it's lots of challenges still.
I think what is interesting is if you look at the BEPS report, when the BEPS report talks about digital economy, then the report leaves it open whether the measures should be taken in the area of direct taxation or indirect taxation, or proposes to study measures in both areas. And I think this could be the key in that respect, because I think it's quite difficult. Of course, the situation as it is today is not very satisfactory, because it's the allocation of taxation rights for those kind of businesses done on a more or less arbitrary basis, because we have more or less residence taxation. There are in most of these situations no permanent establishments in other countries, and of course it's quite easy to manipulate which state the state of residence is. On the other hand, I think it's quite difficult to change that system completely in the area of direct taxation. Of course, there is some room for changes. We can work on the permanent establishment definition, and the UN has gone in that direction, and many developing countries have gone in that direction to lower the thresholds there, for example. So there is some room, but I think there is more music, so to say, in the area of VAT, and therefore I think I would put more emphasis on indirect taxation here, because it might be more easier to change the rules in the area of indirect taxation, because we are not locked in by a treaty network as we are in the area of direct taxation.
In the digital economy, income occurs in nanoseconds.
Right.
Yeah. So what happens, of course, is with regard to that type of economy, the issue with regard to where the income should be allocated depends upon where the value is created. Where is the value created with regard to that particular income? And I think that the tax administrators have to be much more aggressive in redefining the so-called arm's length standards or income allocation to take into account those factors.
So expect changes in over 2,500 treaties, the redefining of permanent establishment, and the rethinking of arm's length. That is the future of tax, at least for now.